how's it going, guys? Welcome back to mentfx, and in this video we are going to take a quick look at what working in a range, even though you may be wrong, really looks like in terms of higher R trades, as well as proper risk management and how sound risk management can actually result in multiple wins, proper wins, and correct partialing and management along the way. So currently we're actually in a lot of buys on EU. Actually, we're in two main ones, partialed of course along the way. So I'm just gonna open this up right here, and you can see everything that we've pretty much gotten involved in since price came to tap into the demand zones we had preset for our weekly outlook ultimately on EU. So EU, as you all know, if you've been watching it, if you've been following it, especially if you're in smart money and looking at some EU stuff, has been kind of stuck in this little range right here with equal highs here on I believe a 4 hour. And generally we've been looking for bullish plays from a lot of areas, and we've just had it melt down for the most part. However, due to the bias that we had and what we had set, as you all know, we had demand zones in these areas, and now these demand zones may function as potential final mitigation areas, because again, to make these plays happen from these locations, we had to sell to buy extremely heavily. And as you can see, if we go left, there were mitigations that occurred in demand zones here, so you'll have to go and look at that on your own time. But what we had was price came into here, started to break structure and put structure into the top side. However, overall we are still moving bearish. However, that does not mean that we can't have a significant push upwards, and if that push is to happen, there is a likelihood that price wants to come lower and have it happen from here, or even come even lower based on higher time frames, which we're not going to deal with right now. We deal with that in the mentorship webinar. And again, the mentorship is only going to be available to you on this website, launchpass.com/mentfx/mentfx. I just put this in every video just to make sure that nobody gets scammed. So it's the only place you'll ever be able to actually join the mentorship. Now, back to this, we have a bunch of people in the actual group that are also either on their prop firm accounts or their funded accounts or on their demo accounts right now with the prop firms, catching the same EU buys to the top side. This is me. This is one of our other great members. He, as you can see, partially taken along the way, losses that are taken as well, because I had losses as well. And we'll take a look at those in 1 second. Multiple people getting involved on the buys on EU that we had today. So that was absolutely fantastic. Everyone's in on the plays right now. And we'll take a look at exactly how we did that and why it works. So ultimately, what we have is a demand zone here, and we understand the demand zone can function as an area where mitigation has to occur. Now, this mitigation, as it's occurring, can have price run up to new highs into supply zones, or even into higher highs above equal highs, into larger time frame supply zones higher up in the market. So if this is the load that it wants to make before making a real run, especially since we're currently, as you all know, in a weekly range, coming in to tap the demand zones that exist here. And again, we could drop lower, but currently we're operating under the bias that most likely we're going to see some kind of measure of retracement up into these areas, either to continue this huge bearish push or to finally continue this overall bearish push, or to overall continue the actual bullish push that is being put in and start to clear new weekly highs and potentially even the monthly highs here, and actually start targeting potential areas there. Either way, as we get lower, you understand that we have this demand zone here, and we've just come to mitigate it. As we basically make that mitigation and we get involved here, so again, we're targeting overall from the simplest side, we want to target these 4 hour highs, which are right here. Right, so each one of those, based on whether they run or not, will be a trade that's going to run over about 107 to 200 RR. Now, again, as we say that, these are not trades that are actually running 100% or 200%, and let's see why and how exactly we get involved on trades like this. So, very quickly, I'm just going to go through this very quick. You can see every trade sent out here, the management for it, the reasons for entry, the losses along the way, that because like you saw, there was one or two. So if we can find that, that'd be fantastic. We can just open this up. Yeah, you can see we had a loss here until price continued to go lower, and we were able to catch things inside of here. And we were able to get involved in multiple areas, and again, we updated this group throughout. But let's talk about it on the actual charts and how you can actually work yourself around a range. So price does come into the demand zones in this area, and again, you can zoom in, you can go and refine some areas on your own, work through some time frames, find out where those demand zones are and what I was looking at for when price came to tap into it. Now, as it tapped into it, we had multiple areas of interest that we could work from, and as it tapped into it, our very first entry was actually based off of I believe a 15 second, or no, actually it was a lower one. It gives a 5-second buy stop entry off of overall Wyckoff happening. And as you can see, price is overall mitigating these points in here. And as you'll notice, we have our Wyckoff developed. Now, you can read this Wyckoff a few ways. We're going to talk about this a little bit in the mentorship concerning reading Wyckoff. But ultimately what you have here, and you have an even better one maybe on the 1 second, but we're not going to deal with that just now. What you have in here is you ultimately have the selling climax into the AR. Actually, you have it more so right here with the selling climax, the AR into the ST, engineering short-term liquidity, because again, recognize that what you see happening right here happens on every single time frame, just over a longer period of time. And once your eyes get used to seeing Wyckoff in a certain way, you'll be able to notice it almost anywhere. Now, again, like sometimes I will label it just for the Instagram, for it to look cool, or for the YouTube to look cool. But the reality is you will get to a point where you will be able to see this liquidation happening live and how you can expect to get involved on these liquidations properly without having to actually go in and label every single point. But of course, labeling it is going to help you get to that point where you understand how to actually trade it. So again, we have that selling climax, AR, ST, the ST and B. Price breaks above right here. As it breaks above the AR, that usually is confirmation for me to get involved, and I get involved on the open. Now, even though it looks like it's a rather large stop loss, the overall trade, if it was to run instead of getting stopped out with my very, very, aggressive management, could have ran up to 1,200, and right now, even as it stands, has ran about, about 1 to 11, right? And I guess right now it's at 1 to 6. But if it kept running, that'd be fantastic. But we're not here to bullshit. This was stopped out, I believe, at the lows right below here, after partialing, of course. So there were many partials taken along the way, and very quickly we can actually bring this over. Let's actually find where the beginning of this entry actually came from, if we can. So we'll just work through all this, come all the way back up, finding exactly where this entry was sent out. So here we go. As price is basically just breaking this high, we had the entry sent out, looking for buys with this low in mind. And as it began to break higher, you can see we had partials already being taken at about 1 to 2.5, 1 to 3, maybe a little bit higher. And again, like, because there is going to be a little bit of spread, I do use an ECN broker to trade my personal account, so the spread is much lower, but we were able to take good partials here. And as you can see, we were targeting an overall of 1 to 183, and again, that's not 183%. Anyone that believes that is just delusional, and anyone that preaches that is either has the hugest balls in the world or is bullshitting. We look here, we continue looking for partials. As you can see, I already had 2 partials taken before we even broke structure, because this is an area of supply, and if anything, price could have tapped into here and continued to drop lower. So that is why, as you can see, even though a trade might run extremely high, I am working within a range, and because of the range I'm working in, I'm constantly understanding how to get in and get out. But the reason that I'm able to get in and get out is because of the way I manage. So despite the fact that I could have maybe held all this, and it could have ran, right? It could have ran fantastic. It could have also very easily done something like this and then stopped me at break even if I was someone that wanted to hold it long term, which is why, as you can see, I have multiple entries. And you see, I do take losses. It's very normal. I had one more loss that I believe I took inside of, I don't even remember where it was. I think there was one more loss that we took before we actually hit these trades. I just had to delete it since it's just a lot of stuff to keep on my chart. Usually I just have the trading day and I delete my trades as I go. But let's work through some of the stuff that occurred. So as you can see, we did have Wyckoff occur. Price began to break higher, and as it broke higher, we had areas that we wanted to partial at on the way up. And as we started to break structure higher, as you can see, we had areas where we were expecting prices to come to mitigate. So remember this red area right here, and we'll go back here very quickly over here, and you'll see that the red area is actually denoted with this little tick mark here, which just basically means that price came to mitigate it. Now, when price came to mitigate it, again, we had Wyckoff play out on a very low time frame. Now, some people might not see this as Wyckoff themselves, and in some cases, I might not even agree with it, but due to the fact that we had a bias preset and we had certain demand zones that we were looking for mitigation to occur at, when price was coming into it and began to put in impulsive legs lower and pretty much stabilize in this area, giving you a fractal redistribution, we understood that as a potential preliminary support. And as that preliminary support gets put in place, we understand that we're going to undergo most likely Wyckoff in the next few given retracements. So as price breaks down, we have the selling climax into the automatic rally, into the secondary test, creating some intermediary liquidity in these areas. We have the ST&B that liquidates those highs, and as price trades up, we basically just buy stopped into the highs. Now, as we did that, again, partials existed at highs, at highs, at highs, based on what your own management is. As you can see, again, I could have held this all the way up, and if it kept running, it would have been a great RR. On the other hand, if it came down, which it did, wouldn't have been as great of an entry. And as you can see, as we saw lower time frame structure begin to break even higher, we again begun to look for entries off of Wyckoff here. Now, even though Wyckoff was occurring in this overall area, and technically the validation of that Wyckoff would have happened above these highs or even these highs, I wanted to get in prematurely. And I actually saw a more fractal Wyckoff within that Wyckoff in these areas, I believe on the 1 second chart. We don't have to talk about that or look at that right now, but as a result, it lined up with what I wanted, and we took a buy, and that instantly got stop lossed out. Now, just because that happens does not mean that you're fully wrong. Now, this came to get stopped at break even, which is completely fine. And this, as a result, this trade right here was actually closed at that break even as well, because that's where I'd mitigated it to. Now, that said, there were other areas and demand zones within here, and you can go and take a look at that on your own. But ultimately, if we just work our way up and down the time frames, you'll notice why I was looking at some of these areas where the dips in with the demand zones that grabbed liquidity in the past were, that ended up moving higher, and where these mitigations happen. And again, as you can see, we didn't get in at the very low. We got in after price began to show us what it might want to do. And that's exactly what we're in right now. So as we get back into these lower time frames and we take a look at what's going on here, we again had the same thing occur. I believe this was on a 5 second chart. So we're just going to take a look at this on the 5 second and walk ourselves through what actually occurred here. As you can see, price is breaking down rather impulsively, and similarly, it has a huge pullback in these areas or so, thereby kind of showing you that it's undergoing a fractal redistribution once again of some sort, right? Redistributes and continues lower. Now this for me is usually a sign of a preliminary support, maybe even in here. And as price drops, we again expect the impulses that occur in price to be synonymous with an accumulation, because overall we are bullish, we've been bullish, and we've been waiting for our first confirmations to go bullish. So as we're watching this, we come into the selling climax, the AR, the ST, creating those intermediary low-term liquidities. If we actually zoom in here, you'll actually see it more refined, but it's ultimately the same thing. You have the selling climax into the AR, into the ST, creating that equal low, into the ST and B, that results in your sign of strength in phase B, just creating a larger trading range overall. The move down, that liquidates all of that, and you could have treated this as a selling climax, and this is an ST, and treated these as the springs, right? Or you can treat it the way we've been treating it, with this being an overall accumulation range. We had the spring come down below these lows, taking out the liquidity there, and we saw the impulsive break higher. After that impulsive break higher, we looked at the demand zones in these zones on a higher time frame. You can take a look at that again, and we were able to take the entries as price broke higher. Now, of course, we moved these stop losses as it went, so the original entry was actually with this low in mind, and as price began to break higher, you'll see that it actually underwent a new accumulation in the form of selling climaxes, ARs, STs, the sign of strength in phase Bs, showing you that it's pretty much just putting in highs and lows, liquidating them short term. The big liquidation of the lows, again, just testing the areas in here, right? So the actual entry did not happen till around right here, actually, off of this secondary Wyckoff. But overall, it was this, and then it became this, because there were multiple entries taken on this. And what you have then, after the ST and B and the spring, actually, so we have the selling climax, AR, the ST, the STB. Yeah, so this is a spring or an STB based on how you're looking at the schematic here. You have this huge impulsive move that, again, begins to break structure, showing you that it's putting in the signs of strength. And here's the backup that comes to test the last demand zones in this overall area. And from there, takes off to give us the buys that we wanted to take. Now, again, as this buy runs up, we don't catch this whole thing as it is. You can see some of the partial things that I've left in here. What was it that we were targeting? Well, we were targeting the old loss that formed multiple equal highs, and on a higher time frame had demand supply zones that rested in these areas. So as price got here, we had partial in some of this position, and we hadn't gone break even yet because price wasn't breaking down in structure or anything on the higher time frames. But as price broke higher, and you'll see that on the 5 minute, I believe. So again, prices, we're still just working in this tiny range. Recognize that everything we've just spoken about has been in the course of, if we actually look at the time that it's taken to take all these entries, in the course of about 2 hours, right? So in about 2 hours, we've been able to take over 1, 2, 3, 4, 5. I think there was a 6th trade in here that we lost that is not showing because I just deleted it. I forgot to. So there's actually 6 trades that was taken over the course of 2 hours. And this is how day trading can look, or for instance, trading can look if you are someone that wants to trade on the much lower time frames. Now, again, everything we're doing here and everything you're seeing developed on the lower time frames is applicable and the exact same on the higher time frames. So based on the type of trader you want to be, that's what you can work with. Now, as we get these higher breaks, again, we leave behind areas of demand that we want to be interested in. And as you can see, the next area of demand was this point right here. Now, this position on its own, even though it did not get hit here, was still not a break even after this high was made. So even though we had partialed multiple times, I had partialed once here and I'd partialed again at this supply zone right here. So this original trade, even though ran about 1 to 6 here, there might have been actually less RR overall secured on this trade due to the way that I like to aggressively partial. The way I partial might be not the best way. However, it's something that works for me. And that's why it's very important that not only do you focus on your strategy, but you recognize that risk management on its own is part of your strategy, if not one of the largest, probably about 80% of your overall strategy. 20% is the actual charting that we're actually doing. So as price gets to this point, you can see that we had almost a perfect entry. And why was that? Because we had the same thing occur. If we begin to get onto a lower time frame, I think it was a 5 second. It might have even been, the 5 second is where it was. And similarly, you see the same thing occurring. We have price breaking down lower, creating fractal redistributions. As it does this, it creates the preliminary supports before the selling climax comes in basically. So we understand that the next few impulses in the move are ultimately going to be an accumulation unless our bias changes. So as a result, we have the selling climaxes into the AR, into the ST, creating, again, those equal lows. The ST and B liquidating them. This time we don't get a little SOS, which is fine. You don't need to have that as part of your schematic. And we have the large liquidation of that. Now, after we have that, we do have the shift in structure to the top side, breaking structure again, thereby shifting us momentously bullish, as well as confirming our higher time frame bullish demand zones. And as a result, you can see that we entered the overall area as price got back here. Again, if you had waited for the actual last down move, which is technically this one little candle here, and you can see how perfectly that got tested, you could have even waited for this last candle, or you could have refined that, as you can see right here. If we just work through some of the entries here, you could have refined that to potentially this last demand candle right here, to the last actual down move. So I'm just going to get rid of all this stuff on here because we don't want it all in the way. So you could have refined yourself again to this last down move with this wick involved, right? And you could have been a buyer there and your RR would have been a lot better. But I wasn't looking at that. I was looking at the overall area. And after seeing the accumulation occur in my overall area, that was good enough to go for buys. Now, as we take those buys, again, recognize that we're not just taking them and holding them to completely new highs. The first partial, again, was taken at this high right here. Because why? There were equal highs here on a higher time. There were equal highs here. Liquidity exists here, and on a higher time frame, this was an unmitigated supply zone. So there's a chance, even though the odds are less likely, there's a chance that price made its way up into here, began to distribute in or around this area, which actually, if you notice, it did distribute. So if you were a seller in this market, you actually had a fantastic sell opportunity in this zone. Broke back down, reaccumulated. I actually didn't see this, so it's actually happening right now. So there may be another option for entries for accumulations off of this accumulation that's occurring right now. But overall, the trade itself, this one right here, after breaking higher and securing the RR that we needed to secure, is at break even as it is, coming back down. And again, the same thing repeats. You will have structure breaks to the top side and you will have demand zones left behind based on whether you're bullish or bearish. If you're bearish, again, you have the opposite. You have break of structures lower and you have supply zones that you're going to be focused on. And as these zones are traded into and you have refined those zones, and those refined zones are getting the price action that you need to see that warrant proper accumulation, proper changes of character, proper Wyckoff, then you can be involved in a range and work in and out of it. Now, if you don't like that way of trading, what you can do is focus on higher time frames. You can do the same thing, and all you have to do is basically screw around with your risk management a little bit until you understand what risk management suits you best. So that's it for me, guys. Hopefully this kind of made a little bit of sense concerning how you can use Wyckoff a little bit more in your trading, how having a bias doesn't mean you are going to get a trade almost instantly, and Sometimes it means waiting a little bit. So this week I've literally not been able to take anything. If anything, I had one loss that I took on the way down, and it was more of an impulsive buy rather than a good one. So technically it shouldn't even be something that's considered, right? So in reality, this is all on the week that should be considered. Other than that, everything has just been relatively bearish, even though I've been bullish. So this was the first time that we actually got something that was worthwhile for me, even though I trade the much lower time frames. Now, again, if I had spent more time at home and I was watching structure begin to break down, bearish, and looking at all these areas here, you can see the distributions that are occurring at all these areas. So these were all opportunities. If for those that were bearish, and we had people in the group that were bearish catching numerous sell positions down and pyramiding into them, but that's okay. The cool thing about the way we trade and understanding the market the way we do is that you can formulate your own idea about what you want to happen in the market, and if that market presents you a entry criteria or setup that you have refined to your own liking, and you understand that your edge is something that will work over time, then you are able to get involved in that. So thank you so much for watching, guys. Join the mentorship if you would like to, and I will see you guys in the next video. Thanks.